But there is one name out there that would seem capable of having a strong debut no matter what the stock market is doing, and that is Facebook, the IPO of which may be closer than you think. Kate Kelly is here with some breaking developments involving a name that everybody is watching. Kate.
Thanks, David. Yeah, I just got back from a few days in Silicon Valley where, of course, this is the IPO that everybody wants to talk about. I mean, there is definitely some chatter about Zynga and certainly the postmortems on LinkedIn and so on, but Facebook is the name to discuss. And, of course, the reason is valuation and the fact that the timing is almost sort of market insensitive. I mean, essentially, this is a company that could probably do well in almost any market condition, so it's not one that needs to look for the so-called IPO window, which we appear to be in right now. In terms of valuation, some of the private markets that track Facebook shares have an implied recent valuation of about $85 billion. Now, up to you whether you put a lot of stock in that. These are fairly thinly traded markets. And let's remember that as recently as January, when Goldman Sachs made a well-publicized private investment in Facebook, it was valued at $50 billion. But people who are on Wall Street and tend to track in this information tell me they think the IPO, if and when it happens, could value the company at north of a shocking $100 billion. And when would this be? Well, apparently it could happen in the first quarter of 2012, and we could see an S1 as early as October or November of this year. Here's the reason. Facebook is very likely to have more than 500 private shareholders by the end of this calendar year. Now, assuming they're on a fiscal calendar year, they will need to count their number of shareholders on December 31st, and if indeed it is more than 500, that will trigger reporting requirements with the SEC, known as the 500 rule for short. They have until the end of April to disclose their financials, but they may just want to get ahead of that by doing a formal initial public offering, I'm told, and that could happen in the first quarter of the year. So we got a massive valuation and a deal that could be coming within the next 9 months or so. One other factor to keep in mind is employee incentivization. The issue here is that employees of Facebook since last spring have not been permitted to sell their shares to other investors, except perhaps in some limited circumstances, but it's become very difficult for them to do that. So there's almost a perverse incentive, I'm told, for people to leave Facebook so they can cash out their equity. Now, there may be some exceptions to that. The company has the right to buy shares back, for example, if you want to do a transaction, they have the right of first refusal. So there may be some opportunities, but really, an IPO would make it a lot easier for employees to monetize their shares.
And of course, on this one, there's no doubt. This is the biggie out there, the biggest that will have come in any sector since Google, I would assume. And one would imagine, Kate, that the underwriters, potential underwriters, the bankers that you've been speaking to, are all trying desperately to get that lead position. Does Goldman Sachs have it conceivably because, of course, of the big private transaction they engineered earlier this year?
The betting does seem to be, David, that Goldman is in the pole position on this one. And as you mentioned, I mean, they engineered this large $1.5 billion private placement early in the year. Now, there were a few issues there, right? There were leaks that created problems for Facebook and Goldman, and also Goldman, as a result of all the commotion, was not able to sell it to their U.S.-based private clients, which was their original intent. So there was a little bit of a bummer there for Goldman, but I'm still told they seem to have a solid relationship with Facebook. Now, whether Facebook has a traditional bake-off, I don't know. What I am told is that their COO, Sheryl Sandberg, has been meeting individually with Wall Street banks to just kind of talk to them about the nature, timing, scope of a deal, and what else the bank can offer Facebook in addition to the underwriting, which is probably, by most people's standards, going to be a piece of cake. So can they make introductions to important people in China or other overseas markets? Is there some way that the retail network at the bank can be beneficial to Facebook, which, of course, has the ultimate retail network, but could always stand to expand
worldwide users, yeah.
Right.
Was there any conversation, Kate, out there in terms of how this IPO, when it happens, will be done? Will it be a traditional IPO where the underwriter will set the price, possibly leave a lot of money on the table, as was the case in LinkedIn? Or are they considering the Google methodology where letting the market price in an auction process set the price?
You mean the Dutch open auction?
Correct.
The W.R. Hambrecht model. I had the same question, Gary, and the sense I'm getting from people is no, they are probably not going to consider an open auction. I should say, by the way, Facebook is not commenting on any of this publicly other than some statements that Sandberg made recently about how an IPO is inevitable and it's going to happen sometime soon. But coming back to the Dutch auction, I've not heard any traction there, and it seems that model has kind of been abandoned, really, and people are likely to go the
Kate, any
route.
conversation, about how much they would conceivably sell into the public markets, or is that still to be determined as well?
I think that's very much to be determined, but I will say there's a sense that if you think about LinkedIn, and this is a very different company, of course, but one thing successful about LinkedIn was that they had a very small public float. It was under 10%. And then you create this sort of scarcity attraction for people. They also apparently had a group of, I don't want to use the word cornerstone because that has a different meaning, but a group of sort of anchor investors, long-only funds that really understand internet stories.
And hung in there. So you really actually had, as we said during that trading, about
a lot of
shares
turnover
were within a very small group, ultimately, of people. We don't have financials on Facebook. I mean, if you talk about a $100 billion valuation, which is certainly conceivable given the growth rate in EBITDA of this company and a multiple to that, but at the end of the day, we're not going to really see the true financials and get any true projections that we can really sort of draw something from until next year.
That's right. That's why we're sharpening our pencils for the possibility of filing an S1 maybe in the fourth quarter of this year. So if you wanted to guarantee that you could go public in the first quarter, you got to get through the SEC process. Your lawyer would tell you, get that paperwork done by November 1st, November 15th at the latest. So we may see some information toward the end of this year, but probably not before.
Does Zuckerberg time it to his potential wedding or something like that?
That I have not heard. Maybe Bill Gates would know.
Yeah.
Exactly.
Importance to the market overall of a name like this finally coming public?
I would say that I agree with Kate that when you have a transaction like this, it's almost sort of irrelevant what the market is doing. But to sort of say that if we are at significantly lower levels for overall tech valuation, I really wonder whether or not they'll be able to get that type of $100 billion valuation that they think. I mean, they must believe right now that what's happening in the overall technology market doesn't matter, but that could change dramatically between now and early next year.
No doubt. That's actually a very important point. Yep. Kate, as always, thanks. We'll be following this one. I have a feeling very